Anyone who went through the late 90s will remember there was no skepticism, and we had valuations based on the number of eyeballs on a website maybe 10 years from then. We're not seeing that right now. We are seeing, wait a minute, they're spending a lot of money on these data centers. This is a little bit of a different story than I was investing in, certainly in terms of, when I say the average investor was investing in with the Mag 6. Those were just cash cows and had huge cash positions. Something's changing here. It's making the typical investor a little more, I'll say, skeptical. This is not just the cash register ringing anymore. This is, wait, a big bet on the future. So I'm happy there's skepticism. I think it's a good thing.
Something big is happening behind the scenes, and almost nobody is paying attention. Cathie Wood just made one of her boldest calls yet, and it might completely rewrite how investors think about artificial intelligence. In her latest interview, Wood compared today's AI revolution to the late 1990s. But with one critical twist. Back then, she said, investors were paying for dreams. Today, they're discounting reality. When the dot-com bubble was inflating, valuations were based on eyeballs on a website 10 years into the future. But now, she says the market is doing the opposite. It's demanding proof, profit, and data before assigning value. And that's exactly why, she argues, the biggest opportunity of this decade is hiding in plain sight. Because while the world debates whether AI is overhyped, a different kind of race is quietly heating up. Not a race for apps or algorithms, but for the physical backbone of intelligence itself. The AI arm race is here. And it's not being fought in code, it's being fought in servers, chips, cooling systems, and data centers that form the foundation of tomorrow's intelligence. In today's video, we'll break down the three companies Cathie Wood believes are best positioned to ride this wave. Buckle up, because the next 10 minutes might completely change how you look at the AI revolution. 1. Tesla, TSLA, the convergence of AI, robotics, and energy. For most people, Tesla is a car company. For Cathie Wood, it's the most misunderstood AI play on the planet. She's been saying for years that Tesla's real business isn't in selling vehicles, it's in training intelligence. Every Tesla on the road is part of the world's largest real-world AI dataset, billions of miles of driving data feeding Tesla's neural networks. That's why Musk built Dojo, Tesla's in-house supercomputer, a machine so powerful it can process visual data faster and cheaper than traditional systems. It's the backbone of Tesla's full self-driving project, and it's already giving the company an unmatched data advantage in autonomous systems. But here's where the story gets even more interesting. According to recent reports, Tesla is entering a new phase of its AI journey. After scaling Dojo, the company has begun partnering with Samsung on a $16.5 billion deal to develop next-generation AI 6 chips in Texas. That's not just a side project. It's Tesla quietly building its own compute infrastructure optimized for autonomy and robotics. While investors debate EV margins, Tesla is engineering its future in $3 trillion industries at once: AI, robotics, and energy. Let's talk about those other two pillars. Musk's long-term vision centers around Optimus, the humanoid robot that could redefine labor productivity. This isn't sci-fi anymore. Tesla's latest prototype can walk, recognize objects, and handle delicate tasks. Cathie Wood has said multiple times that Tesla's AI unit could one day surpass its automotive division in value. Then there's Tesla Energy, one of the most overlooked parts of its empire. As global data centers devour more power, energy storage systems like Tesla's Megapacks will become essential for powering the AI infrastructure boom. Wood often calls Tesla's energy and robotics units the dark horses of her thesis, industries that could multiply Tesla's revenue base far beyond vehicles. Even amid market volatility, Tesla remains one of ARK Invest's largest holdings. Wood's 2029 price target still implies multi-trillion-dollar potential, built not just on cars, but on data, AI, and autonomy. So, when Cathie Wood talks about the AI arms race, Tesla is the frontline soldier. While others build apps on top of AI, Tesla is embedding it into reality, one robot, one data model, and one factory at a time. 2. Supermicrocomputer, SMCI, the heartbeat of the AI data center revolution. Next, let's talk about the quiet builder, the company supplying the infrastructure that makes AI possible. Supermicrocomputer, ticker symbol SMCI. When people hear AI, they think of chatbots, robots, or self-driving cars. But behind every AI model, there's a physical army of high-performance servers processing billions of calculations, and Supermicro builds those servers. This is the company powering the world's AI clusters from training to inference. Its fiscal Q1 2026 results told a powerful story. While EPS came in below Wall Street's expectations, the company's revenue guidance was raised, and it reported a record $13 billion order backlog, the largest in its history. That backlog is being fueled by new AI orders tied to NVIDIA's Ultra and Rubin chips, which require highly specialized server architectures and liquid cooling systems, one of Supermicro's biggest strengths. Margins dipped slightly due to R&D spending, but that's the price of innovation. Supermicro is one of the few companies in the world capable of delivering next-gen data center solutions at scale and fast. Its direct liquid cooling technology is becoming crucial as data centers face skyrocketing heat and power constraints. Analysts project the global liquid cooling market will triple by 2030, and Supermicro is already leading that transformation. Unlike legacy giants like Dell or HP, SMCI's rapid design-to-delivery model lets it adapt instantly to new chips, which is exactly why hyperscalers and AI developers are choosing them. Cathie Wood's thesis is clear. The infrastructure of AI will be where the biggest fortunes are made. And SMCI is building that backbone, quietly, efficiently, and faster than anyone else. 3. Marvell Technology MRVL, the custom chip powerhouse. Finally, we move from servers to silicon, the brains of the AI infrastructure. Meet Marvell Technology, ticker symbol MRVL. While NVIDIA builds general-purpose GPUs, Marvell designs custom AI chips for the world's largest cloud providers, companies like Amazon, Microsoft, and Google. These hyperscalers are in an arms race of their own, building proprietary silicon to reduce dependence on NVIDIA's supply chain and costs. In its latest earnings report, Marvell delivered record quarterly revenue of $2 billion, up 58% year-over-year, with data center sales soaring 69%. AI is now the engine driving nearly 3/4 of its total revenue. The key here is specialization. Marvell's custom ASIC chips handle repetitive AI tasks far more efficiently than GPUs, giving companies massive cost and energy savings at scale. That makes Marvell an indispensable partner in the AI infrastructure chain. And with McKinsey projecting global data center capacity to double by 2030, demand for custom silicon is only accelerating. Marvell recently announced a $5 billion share buyback, including a $1 billion accelerated program, signaling strong confidence in its long-term profitability. Unlike speculative chip startups, Marvell runs a tight ship, disciplined, profitable, and essential. As Cathie Wood's thesis suggests, the picks and shovels of this AI revolution aren't always the loudest names, but they're the ones quietly building the future, and Marvell is one of them. Cathie Wood's big idea: the AI infrastructure war. In her recent remarks, Wood described what she calls the AI infrastructure war. It's not just about software. It's about the trillion-dollar battle to build the hardware, chips, and networks that make AI possible. She highlighted how the world's leading AI labs, OpenAI, Anthropic, xAI, and Google DeepMind, are racing to secure compute power faster than ever. Each is investing billions into data centers, networking systems, and custom chips. And the companies enabling that, like Tesla, Supermicro, and Marvell, are the arms dealers in this new technological war. They're not chasing hype. They're engineering the foundation of a new industrial era. The dot-com era was about promise. This era is about performance. Back then, we invested in ideas. Now, we're watching those ideas become reality, one data center, one chip, one autonomous machine at a time.